John Nadler, after the latest Fed minutes, there doesn't seem to be a clear consensus on gold in the market. Could this mean good things for gold traders as opposed to gold bugs?
Well, indeed, as it could shape up to be a pivot year for gold prices, I think the bulls and the bears are going to really try to duke it out in earnest. And whereas the bears would like to try to push this down to anywhere between $1,200 and $1,500 an ounce, of course the bulls would like to see something north of 1,700, possibly as high as 1,900. Consensus among projection making banks is somewhere in the middle of the range, right around 1,600 for this year's average. But I think this year will shape up as volatile and not as business as usual, which used to mean, go to sleep and wait for 12% returns on an annualized basis. It might be a tad difficult going because of these uncertainties surrounding not only the budget issues, but of course the Fed and the Fed's exit policies, which appear to be sort of, making rumblings that they're preparing for an exit. So it should be an interesting year indeed.
Well, last year was not a good year for the gold miners. Gold ended up in positive territory, but the gold miners ended down. Do you think that they can get a break in 2013?
Well, that's really a tough one. I mean, the majors lost somewhere close to 10%, the juniors close to 20%, and that came on the heels of a really lousy year the year before. GDX appears to have some support around the $45 per share level. If that's broken, of course, it could get down to the 40s or perhaps the $40 number, same as with gold, where the Maginot line in gold is about 15.25. But I think what has to happen here is some concerted performance trend among these miners, and we haven't seen it. That doesn't mean that an investor cannot make money at this game, provided they're extremely selective and they look for these companies that are adding value. Mind you, there are a whole number of them out there on shopping sprees, have cash in the bank. Perhaps their shares are trading at less than the cash in the bank. And I think if you do exercise that type of caution, you might do okay with selective shares. The sector as a whole, I don't think is yet ready to pivot and turn in a great year.